Hello, everyone. This is Anthony Alaka with Torrey Hills Capital, and I want to welcome you to the Endeavour Silver podcast for April 27th, 2021. I hope everyone's doing well under the circumstances. And I want to thank you for taking the time today to join our virtual lunch. We have a very interesting and timely presentation today with a company that we feel is particularly well positioned to benefit from the recent upward trend in precious metals pricing. Underlying economic trends and a move to cleaner, greener energy suggest that silver prices will continue to remain strong for the foreseeable future. In fact, President Biden just announced a pledge to reduce gas emissions by 50% by 2030, and Credit Suisse just commented that we are in the beginning of a multi-decade investment opportunity for clean energy. So there's no doubt that silver will benefit tremendously from this trend. Endeavour Silver is a mid-tier precious metals company with 3 high-grade underground silver gold mines in Mexico. The company is also advancing its Terronera project towards development with a feasibility study, which should be completed here in the next couple of months. They also have a portfolio of several other exploration and development projects in Mexico and Chile. Endeavour Silver trades on the New York Stock Exchange under the ticker EXK and on the TSX main board under the ticker EDR, and is currently trading at roughly $5.70 per share US, representing a market cap of roughly $925 million. The company has a strong cash position of roughly $70 million in working capital and an accomplished management team that has a proven track record delivering results. With us today to discuss Endeavour Silver's operations and growth strategy going forward is the company's founder and CEO, Mr. Brad Cooke. Brad, welcome.
Thank you very much, Anthony.
It's great to have you on today, and I want to welcome you to our virtual lunch, and thanks for taking some time to bring our viewers up to speed on Endeavour Silver. Before we get started, I just want to mention if our viewers have any questions during the presentation, you can click the raise your hand icon and I'll unmute your microphone, but I think the easiest way to ask a question is just to simply type it into the chat or Q&A box, and we will make sure it gets answered. With that said, I'm now going to turn it over to Brad Cooke. Brad, the floor is yours.
Fabulous. Thanks very much. And again, welcome everybody to this lunchtime presentation on Endeavour Silver. I usually like to start actually with a preamble on where we're at in the silver cycle. As you know, we were stuck in a bear market for many years, both gold and silver. In fact, all of the commodities. And only in the last 2.5 years have gold and silver emerged into this still growing bull market for the precious metals. It was primarily a sharp increase in investment demand for gold and then silver that sparked the start of this bull phase. For instance, if you look at the global silver ETFs from 2011 to 2019, they pretty much flatlined their holdings at about 650 million ounces of silver. And yet in the last 2.5 years, we've seen that position spike to over 1,050 million ounces silver held by global ETFs. So a very direct measure of sharply growing investment demand. There's another way to look at it. So, you know, if, in 2020, US-based silver coin and bar demand actually doubled. And with the chatter on Reddit in January, February this year, I would not be at all surprised if this was another up year in terms of US coin and bar investment demand. So again, another direct measure of growing investment demand. That's why we're in a bull market. And we've seen silver come off of a low of what, 13 and change per ounce. It peaked at 30 in February, 30-ish, and still holding steady at around 26, which is quite remarkable given the sell-off in gold since last August. Gold's had a more profound correction and consolidation compared to silver, and that's very typical of a bull market. Silver always outperforms gold as you go deeper and deeper into a bull market. And if you look at the silver gold ratio, it spiked as high as 125 in the March crisis a year ago. The normal cyclic high is typically around 85, at least since the year 2000. And yet here we are sitting today at about 67. If you look at where the ratio ends up in the bubble tops of these cycles, 2011 was a mini bubble, and silver got to $49. The ratio got down as low as 31. That's less than half the current ratio. So I think that's where we're headed in the rest of this bull market. And if we come back to the fundamentals, I talked initially about investment demand. What about the rest of demand? Because really investment demand is only 25% of total demand for silver. There's another 25% in jewelry and silverware, and slightly more than 50% of total demand is actually industrial. That's one thing that differentiates silver from gold. I love to talk about 3 disruptive technologies that have driven silver through the first 2 legs of this commodity cycle, starting in around the year 2000, and emerging new technologies that will drive silver to the top of the current phase of the bull market. The first disruptive technology I'm talking about was really the reason why I founded Endeavour to go looking for strategic silver and gold assets back in 2002, 2003. And this was the emergence of silver nanofilms coating electronic contacts, which allowed for an explosion of electronic goods, cell phones and laptops and big screen TVs. Everything electronic now has tiny amounts of silver coating its electronic contacts. And the emergence of China as a consuming nation, which helped to fuel that boom from 2000 to about 2010. At which time, second disruptive technology, the emergence of solar photovoltaic power as a commercially viable use for silver, took over as the fastest growing component of industrial demand. And last year, 96 million ounces, or 10% of total demand, were consumed by solar photovoltaic panels. If you believe any of the 10-year forecasts for solar installations worldwide, that number needs to double by 2030. So we can ask ourselves very simply, where is the next 100 million ounces going to come from for solar power alone? That's a 10% growth just for one use. But most exciting is this third disruptive technology. And when we talk about the electric vehicle, we talk about lithium and cobalt and nickel, all the battery metals, but nobody talks about silver. And yet these are electric vehicles, and they consume twice as much silver as conventional vehicles. Last year, conventional vehicles took 60 million ounces off the market for their electronic circuitry. And again, if you believe any of the 10-year forecasts for EV growth worldwide, that number has to triple by 2030. And where is that 120 million ounces going to come from? More than 10% of total demand. So 3 disruptive technologies will ultimately take over from investment demand through the rest of this bull phase. And silver basically is a green metal. You can't have solar power or electric vehicles or 5G telephonics without silver. And that's where we're headed in this cycle. If you look at the demand side, it's equally exciting. We just came off our 4th consecutive year of declining mine supply. And the reason for that is also very simple. Silver, amongst all the commonly traded metals worldwide, is the only one that is dominantly a byproduct of other metals, a byproduct of copper mines, lead zinc mines, and gold mines. 70% of new mined silver every year does not come from silver producers like Endeavour. It comes from the big diversified global producers, Polymet and Codelco, BHP and Rio Tinto. And they're more than happy, by the way, to sell forward their byproduct silver and remain unhedged on their main products, which helps to explain why there's such an unbalanced position between the derivative market, that is the options and futures market, and the physical market. We won't go there unless you want to in Q&A, but what I'm pointing out is that the fundamentals for silver are not only very strong, they're stronger than gold, which is typical in the bull market. So I'm a bull. I think we still have years to run in this cycle, and Endeavour is, I think, very well positioned to deliver value for our shareholders going forward. So on that note, why don't we move to the slide presentation? And I think our caption, profitable production, compelling growth, really captures the 2 main catalysts to drive.
Brad, not to stop you there, but you're going to want to share your screen, right?
I am going to want to share my screen. Bear with me. I'm just waiting for you to allow me to share my screen. Here we go. And I trust everybody can see that.
Yes.
So I will be making some forward-looking statements today, and you are duly cautioned. A quick update in terms of investor highlights. Endeavour is a mid-tier producer of gold and silver. We have 3 high-grade underground silver gold mines in Mexico. There's really 4 key catalysts to drive growth for our shareholders, drive value for our shareholders. The first is optimizing our operations. We've just come off of 2 consecutive years of reducing our operating costs to boost our free cash flow. And we think we can do a little bit more of that going forward. Perhaps the most obvious catalyst is our organic growth profile, best in sector with not 1, but 2 discoveries awaiting development, one of which is already fully permitted. The idea of making new discoveries and building new mines is not new to us. Every mine we've ever put into production since 2004 was a direct result of a virgin discovery by our exploration group. Discovery and organic growth is in our DNA, and you can differentiate Endeavour from the rest of the silver mining group by that very fact. And last but not least, like others, we do pull the trigger on opportunistic mergers and acquisitions from time to time. All of our key assets were acquired from somebody else at appropriate times, but typically for pennies on the dollar in the bear market where we could add direct value, bringing our money and expertise to bear on making new discoveries, and then fast tracking the development to production. That's what we do. Because we're only silver and gold, and silver is dominant, we have a sector leading beta or leverage of our share price to the silver price. So I'm headquartered here in Vancouver, British Columbia. All of our core assets are currently located in Mexico. We have a portfolio of world-class exploration projects in northern Chile, and there's about 2,200 people currently working for the company. Some recent highlights. Our first quarter production was released recently, and we're up 26% year on year, producing just shy of 2 million ounces of silver and equivalents in the first quarter. We announced a recent management succession plan. In barely 2 weeks, I'm moving up to the role of executive chair, and our CFO, Dan Dixon, will take over as CEO. Our VP, Christine West, will take over as CFO. We also completed the sale of a non-producing and non-core asset, the El Cubo mine, and our $15 million of nominal cash and share consideration is currently worth $25 million thanks to the run in the shares that we received on that sale. In March, our shares were added to 2 major indices, the S&P TSX Composite Index, as well as the Gold Miners Index, the GDX ETF, and explains some of the strength in our stock in March. We did, reflecting on last year, actually meet our production guidance, notwithstanding a 2-month shutdown due to the COVID pandemic. And because of our improved operating performance, we delivered really strong financial performance into the year end, with cash costs down to $5.50 per ounce silver, net of the gold credit, operating cash flow up almost 300% to $56 million, and our year-end cash closing the year at $61 million, and heading for $100 million here in the next couple of quarters. So our revenue split last year was about 54% silver and 46% gold. And with the declining gold-silver ratio, we will become even more silvery as we go forward this year. Again, the positive impacts of our operational performance on our cash costs shown in the chart right. So we had a great turnaround last year. Here's 4 financial metrics to show you blow by blow, quarter by quarter, how we did. And you can see that whether you're looking at silver margins or EBITDA, free cash flow or cash, we had a spectacular year last year. And the reason is very simple. At a time when everybody was enjoying higher metal prices, we were one of the very few companies enjoying lower costs. And so we got a double whammy in our free cash flow. Our outlook for this year is for slightly higher production, significantly higher cash flow, again, due to the higher metal prices. Interestingly enough, slightly higher costs, because now that we're profitable and we've used up some tax loss carry forwards, we are actually paying higher royalties and higher mining taxes, primarily at our largest mine, Guanaceví.
We move away from the operations to our development pipeline. First up is our spectacular discovery at Terra in the middle of a feasibility study. And we hope to have a production decision and start breaking ground later this year. Parral is intended to follow Terra into production in the years 24-25. And last but not least, Chile is there to give us exposure to hopefully a world-class discovery. So let's tour the main assets. Our first silver mine, acquired in 2004, brought back into production in 2005. It's the Guanaceví mine in Durango State. It's also the only mine where we produce bars. And Guanaceví has become our cornerstone silver asset. In the first quarter of this year, our production was up 22%, grades were up 30%. Throughput, interestingly enough, was down 5% due to some extreme weather events in February, if you recall, impacted natural gas prices. And in Mexico, we actually had downtime at the Guanaceví operation due to a lack of power, followed by a spike in power prices. And so we deliberately took offline one of our filter presses to do long awaited maintenance on it. So you can see in the chart left, the tons per day going from the mine to the plant actually dipped in Q1. We're actually playing catch up on that now here in Q2. But the grade spiked from 412 grams per ton to 453 grams per ton. So the production actually was bang on plan. But we typically budget 1.1 to 1.2 million ounces of silver equivalent production from Guanaceví each quarter. That improvement in operating performance drove our costs down last year, $10 cash costs, $17 all-in costs. And again, this is a silver dominant asset. 80% of the revenue is silver, 20% is gold. Moving to our second mine, acquired in 2007, the famous district of Guanajuato. Excuse me. Bolañitos was, for the better part of 10 years, our cash cow. We pulled over $200 million of free cash flow out of this mine. From 2009 to 2018, it actually fell on hard times in 2019, and as a result, we completed an operational turnaround last year. As a direct result of that operational turnaround, our first quarter production was up 50%, throughput up 19%, grades up 19% year on year. And we budget typically about 600,000 ounces now of quarterly production going forward at Bolañitos. That operational outperformance drove some financial outperformance. Now, this is dominantly a gold mine, 80% gold, 20% silver. And so the cost to produce the silver net of the gold credit means that the costs are significantly negative. The value of the gold significantly exceeds the entire cost to run the mine. So the silver is basically free. And needless to say, both mines are throwing off significant free cash flow at these prices. El Compas, our newest and smallest and most gold-rich mine, is in yet another famous district in Mexico, the Zacatecas district. At El Compas, we had a pretty steady year and a steady quarter. Production was flat, throughput up a bit, gold grades up, silver grades down. And we budget typically about 200,000 ounces of silver equivalents per quarter at El Compas. Again, because it's dominantly gold, the costs are negative, but it's generating free cash flow. Let's move now to our Terra project in Jalisco State, the first of our development projects. Terra is our biggest discovery to date, and when it's up and running, it'll be a large and low-cost mine. It will effectively double the company's production and half our costs. It's that important to our future. It's a truly district scale opportunity spanning 20,000 hectares. What's that? 50,000 acres. We've now mapped and sampled over 50 old mines throughout the district. We haven't drilled even half of them. Last year, we completed a final pre-feasibility study with robust economics. And there's 80 million ounces currently in reserves and resources in 2 discoveries at Terra and La Luz. We added 2 properties last year, Las Cotas and Cerro Gordo. We're currently drilling Las Cotas. We're drilling here an extension of Terra.
And later this year, we'll start drilling Cerro Gordo. So back looking to expand the resources, we think we can get from 80 to 100 million ounces, 120, maybe even higher. Last year's economic study evaluated a 6 million ounce per year mine for a minimum of 10 years. The economics at significantly lower metal prices, $16 silver, $1,400 gold, were significant, with a net present value of $137 million after tax, an internal rate of return on the invested capital of 30%, and a payback period of 2.7 years on the invested capital. What's really special, though, about Terronera are the costs. Again, this is about a 60-40 silver-gold split by revenue, and taking the gold as a credit against the cost to produce the silver, we estimated the cash cost at zero, even on an all-in sustaining cost basis. So let me define that for you. Cash cost is basically a snapshot of the cost to run the mine for a day. It's cash in, cash out. All-in sustaining cost is an attempt to capture all of the costs for the life of the mine. So life of mine operating costs, exploration expenditures, capital investments, royalties, taxes, general and administrative costs are captured in this AISC number. And we estimated last year that even over the 10-year mine life, we could produce silver at barely $2 per ounce. So it will be one of the lowest cost mines in the entire silver sector. Here's last year's base case and spot case. We've just plugged approximately current prices into the last year's model. And you can see a dramatic impact on the financial metrics. NPV more than doubles to almost $300 million. The internal rate of return almost doubles to 55%. The payback period halves to 1.4 years. And the annual after-tax free cash flow from one mine alone, more than $50 million a year. So a fabulous opportunity for the company. Here's your 10-year mine life shown silver in the silver bars, gold as a silver equivalent in the gold bars, silver equivalent grades in the red dots. You can see that we're going to start off the mine life with almost 500 gram grades, one of the highest grade mines in the entire sector. That's why the economics are so good. And even at the end of the mine life, 350 gram grades is better than most in the silver mining sector. We've completed about 80% of the current feasibility study. We expect to receive that study in July. And through that study, we've accomplished a number of things. We've already expanded the property footprint, where after a 2-year break, we've resumed drilling to expand the resources. And we're tweaking a number of metrics. We're trying to expand the 1,500 ton per day model last year up as high as 2,000 tons per day, tweaking a number of aspects. Tailings transport, we're now looking at reducing our carbon footprint using a slurry pipeline instead of haul trucks. And for the same reason, we're looking at natural gas power on site and a little bit of solar to reduce our carbon footprint. Next steps are really to arrange the debt financing for this project, go to the board for approval, complete the feasibility study, and start breaking ground by the end of the third quarter. So very exciting time. Actually, before I go to the next project, I should point out that we have a $9 million budget for Terronera in the first half of this year, including the purchase of mining equipment. We've already purchased the 1,500 ton ball mill. It's sitting in a warehouse in Puerto Vallarta. We've already actually started on the temporary construction camp. We have 48 beds currently installed in a trailer camp, on our way to 400 beds by the end of the year. So Parral is intended to follow Terronera into production. It's yet another famous silver district in Mexico, in Chihuahua. And we've already found 40 million ounces here. There's 4 historic mines, Cometa, Palmilla, San Patricio, and Vita Colorada. And we're actively drilling Vita Colorada to try and take the 40 million ounces to 50, 60 or higher over the next 2 years. We will then take the development team from Terronera once it's up and running and try and put Parral back into production at 4 million ounces per year by the end of 2025, which is where it was when it closed in 1990. Coming now to the end of the project review, we're in Chile for really only one reason. We asked ourselves years ago, where do you go for the biggest silver deposits in the world? And the answer pretty simply was Bolivia. Bolivia is the home of Cerro Potosí, Cerro Rico, and many other massive historic and current silver discoveries. But we don't want to go there. Nobody goes to Bolivia. There's exceedingly high political and social risk in Bolivia. So we asked ourselves as geologists, where does that Bolivian silver belt go? It goes down south into Argentina and Chile. Argentina is not an easy country, so we turned our attention to Chile. And literally over the last several years, we've spent several $1 million staking, mapping, sampling, and surveying 3 highly prospective world-class targets. They're all drill ready, and we finally started drilling this year. Upper left is our Paloma multi-million ounce gold silver target. There's a red pickup truck for scale. This is a massive 2 by 3 kilometer alteration zone within a volcanic caldera. Multiple targets. We've just finished our phase 1 drilling. We should have results this quarter. Secondly, an even bigger 5 by 6 kilometer alteration zone at Cerro Marquez, which has turned into a true porphyry copper gold play. And again, drill ready, but we're not a copper company, so we're shopping for a copper partner on that one. And last but not least, in the upper right with the friendly neighborhood alpaca, this is our true extension of the Bolivian silver belt, a project called AIDA. We don't have a drill permit yet, but we hope to have it and be drilling here late this year. So 3 world-class exploration targets in northern Chile to break out of the small high-grade underground mine mold and get into something world-class, chunky open pit opportunity that would secure not only years, but perhaps decades of future mine life for the company. So all of that basically adds up to a sector-leading organic growth strategy. In terms of cash flow growth, you can't do better than Endeavour. We were the fastest growing company in the silver sector last year, thanks to our falling costs. In terms of development projects, again, you can't do better than Endeavour. We have not 1, but 2 discoveries in our pipeline to drive production growth going forward, and Terranera alone will double our production when it's up and running in 2.5 years. Last but not least, Chile is certainly high risk, high reward, no guarantees. But our attempts in Chile are to make a world-class discovery to assure us a long mine life. Current market cap is around $800 to $850 million. Good daily liquidity in the stock, listed on the big board in New York. We have a very strong balance sheet with 61 million cash at year end, heading for 100 million cash in the next quarter or so. And 15% of our shares are owned by the 3 major indices, the GDXJ, the GDX, and the S&P TSX Composite. The world's largest silver mining company, Fresnillo PLC, actually has a 2% toehold in the company. 10 analysts cover the stock. So back to our catalysts to create value this year. We think we can tweak more value out of the operations and deliver more free cash flow than we did last year. We're advancing Terranera now to become our next core asset. We continue to explore around the existing mines to extend the mine lives. We're attempting to make a high risk, high reward discovery in Chile. And we're always actively looking for opportunities to grow through mergers and acquisitions. So that's it basically. When you invest in Endeavour, what you're getting is a mid-tier silver producer run by an experienced management team who simply by developing our existing organic growth pipeline will become the next senior producer of silver in the sector. We run a strong balance sheet with no long-term debt, and we're a pure silver gold player. Thank you very much.
Thank you very much, Brad, for sharing that with us and for bringing our viewers up to speed on the company. I want to, let's see here. So I want to, thanks for bringing us up to speed on the company. So many exciting developments are happening with the company right now, and it looks like 2021, the rest of the year, is shaping up to be a pivotal one. At this point, I want to open it up to questions. And if you have a question, I know we have a couple in queue right now, but if you have a question, you can either raise your hand, hit the raise your hand icon and I'll enable your mic. I think the easiest is to just type your question into the Q&A or chat box. So we're going to wait a couple minutes, just to a minute or so to wait for some questions. In the meantime, for the feedback purposes, the code word today is Marlin, M-A-R-L-I-N. So the first question we have, Brad, is how has COVID affected operations and where are you now with it?
So COVID in Mexico is a bit of a basket case. It's worse than Canada, and we're significantly worse than the US. Thankfully, we're seeing vaccines finally being rolled out in both Canada and Mexico. So that's the general COVID setting. We're very fortunate. We moved very quickly in March of last year to install our COVID protocols, both for prevention and for recovery. So we've not been impacted significantly in the last year. In fact, in February, we got down to, I think, 4 active cases in our entire workforce of 2,200 people, which is remarkable when you think about it. It did spike after Easter because, after all, Latins love their Easter and they don't know what social distancing is. So we saw a little mini rise after Easter, but it's coming back down again. And all in all, the only impact from COVID was we did actually, in March of last year, send a number of people home, either for age or health complications to minimize their risk. We sent them home on base pay, by the way, and some of them are still at home. So we had to be more productive in the workforce because we were missing some bodies. And we actually had a great spike in productivity last year as a result.
In terms of the bottom line, though, in numbers, I mean, was it minimal impact on the balance sheet?
Oh yeah, and if you're talking about the cost of installing COVID protocols in all of the operations, maybe it was $1 million over the course of the year. With when people arrive at the gates of any of our operations, they get a temperature check, questionnaire, a visit to the doctor if necessary, complete personal sanitization, complete vehicle sanitization, and that's ongoing today. So we pretty much did a pretty strong protocol to stop COVID at the gates.
Great. And we have another question. What is the remaining life of the producing mines, and do you target about 10 years for new mines?
So I mentioned that there's a minimum 10-year life at Terronera already, and that's in reserves. We have some additional resources that aren't in the mine plan, and we're continuing to grow the resources at Terronera. So we do expect significantly more than 10 years at Terronera. At the other mines, we typically started by buying a fully built and permitted facility that had run out of ore and been shut down. And so the value proposition at Guanaceví, Bolanitos, El Cubo, and El Compass was all the same. Restart the exploration, see if we can find a virgin discovery. If we can, we are in a position to fast track those discoveries to production because the processing facilities are already built and permitted. And we hit an absolute home run at Guanaceví. So keep in mind that with that business model, none of those 4 mines started with any reserves or any mine life, 0 mine life. And through our exploration, we were able to get up to typically 5 years of life at each of the mines and then run. We've been mining now at Guanaceví for more than 16 years, and we still have a year of reserves and 4 years of resources ahead of us. And we haven't even finished drilling all of the obvious targets.
Yeah.
At Bolanitos, it's a very similar story. I've been there for 13 years. We're still drilling, and we replace the reserves every year. Now, it's a shorter mine life than Guanaceví. I think we're running currently a year of reserves and 2 or 3 years of resources. At Bolanitos, for one particular complication, there's a town sitting above our main mine at Bolanitos. It's called the town of La Luz. And of course, you can't drill from people's houses. So all of our drilling at that project is largely underground, and there's only so far you can drill underground to make it economically feasible. At El Compass, which is our smallest and most recent mine, it does have the shortest mine life. We did make some discoveries last year. We're currently evaluating whether we can get them into the mine plan to extend the mine life. So that's a full review of mine life at the operations and at Terranera.
Yes, thank you for that. One question here. In terms of the research reports, what are the analysts suggesting as a 12-month price target in general? I mean, can you comment on what the consensus is?
You know, I should know that, and I don't, but typically the American analysts, and I think we have 3 or 4, are the more aggressive ones. They buy not only the gold silver story, but our historic track record for creating value and growing the company. And those would be significantly higher than current share price. The Canadian analysts are much more backwards looking, if you will. They look at where we were rather than where we're headed, and use it to develop their own cash flow models. And so we're typically approximately at the recommended prices for the Canadian analysts. As a result, we have a bunch of buys and a bunch of holds, no sells.
Right. Can you talk about the timeline for getting Terranera up and running from, completing the feasibility to, board approval and going forward till you're actually pulling silver out of the ground?
Good point, actually. I forgot that in my presentation. So we are expecting the feasibility study in July, and we do plan to go to the board for approval in August, which would allow us to break ground by the end of September. It's approximately a 2-year timeline for construction and commissioning. And so we would be looking for initial production and cash flow late 2023, and then a first full year of production in 2024.
Great. And, you showed the map earlier in the presentation, but just based on your experience in terms of just drill results and things like that, from what you're seeing at Terranera, how is it compared to some of the other things you've seen, other mines you've seen in your career, in terms of drill results?
This is a good one. This is a career discovery. I've been lucky to have been involved in a number of discoveries throughout my career, but the run of discoveries that we've had in Endeavour is the peak of my career as an exploration geologist. And of course, it's a team effort. I'm not the guy running around, sighting the drill holes, but I am the guy who did the deals, recognizing the potential. And Terranera is, I think, a special opportunity because of its district scale, because we've only got 2 ore bodies so far, but there's literally dozens of veins that we've mapped and sampled, but not yet drilled. And so I do expect that our 80 million ounce reserve and resource base will grow to 100, 120 or higher.
Wow.
And, so it's an exceptional opportunity for the company. It will become the largest and most important core asset of Endeavour when it's up and running.
Yeah. I think it's important to a lot of investors, who are looking at companies to invest in, to talk about the positive impact that Endeavour has had on just the local communities. Can you talk about how you treat, the people, the environment, and the impact of on the economy that Endeavour's presence has had?
Absolutely. I love the fact that institutional investors have all of a sudden discovered what they call ESG, environmental, social, and corporate governance. But this is not something that we just discovered. And, let me tell you about how we came to our sustainability policies. When we arrived in Guanaceví, it's at the tail end of a state highway in the state of Durango, and about a 5-hour drive from the capital city. It's basically in the foothills of the Sierra Madre Mountains, and the highway stops there. So typical of rural Mexico, there was a complete absence of government services. When we arrived in Guanaceví, there was no nurse, no doctor, no clinic, no ATM, no bank, no secondary school, no paved roads, no fresh water supply. They just used the river. And we wanted to build a mine, reactivate an old mine. Ultimately, we very quickly got that mine up to 1,200 tons per day within a space of 2 or 3 years, and 400 full-time employees and another couple hundred contractors in a town of 2,000 people. So you can't just do that like turning on a light. It's a very complicated process of trying to understand all of the things that you need to accomplish your goal, and that really caused us to consider getting involved, very actively involved with the locals and making them our partners, because we had to. And so we were responsible for bringing the first nurse, first doctor, building the first clinic, first secondary school, et cetera, et cetera, et cetera, first ambulance. And because it wasn't going to be done by anybody else, but we didn't want to just walk in and start writing checks, because you know what will happen to the money if you do that. We effectively got to know the local people, and we built partnerships with the municipality, with the ejido, which is a typical communal land association around each community in rural Mexico. They're in charge of land access, and of course with then state authorities with regard to health programs, et cetera. So we come about our ESG policies, our sustainability programs by trial and error, and by getting to know the local people, forming partnerships with the local people, and making sure that as we grow, they grow, and that everything we do has a benefit for them, and not cutting checks.
Yeah, and I think that's very important, and you guys have done a great job of doing that. And on the back end of your investor presentation, it's really impressive what the company has done to support those communities and support the environment. I think it's great. So you mentioned earlier your position in Vangold. You're up quite a bit on the company, on the stock. What are your intentions with the stock and the company? And I mean, are they more of kind of a partner that you're going to, help along the way, or are you locked up for any period of time on the stock?
Well, we had 7 great years at El Cubo. We managed to turn around that operation and generate profits throughout pretty much the entire bear market. But we did run out of reserves, and we determined that it was a non-core, non-producing asset, and that we'd be better off selling it. So we contacted Vangold. They have their own small discovery not far from the Cubo plant. We worked on a deal that we felt was a win-win deal. Obviously, they didn't have the cash to just pay us off, and so we took a chance and accepted some significant share position on 12% of the company. We fully support their attempts to become the next primary silver producer in Mexico. And as a result, their stock is performing, and everybody's happy.
So what's good is for them is good for you,
Absolutely.
basically.
Absolutely.
Can you talk about any potential acquisitions, or how you're approaching any acquisitions of new assets or anything like that? Or is just the focus on growing with what you have right now? Obviously Terronera is a big project for you, but are your eyes always open to new properties, et cetera?
Absolutely. We paid $7 million for Guanaceví, $6.25 million for Bolañitos, $6 million for Parral, $2.75 million for Terronera.
Wow.
Terronera is about to come out of our pipeline and into production, so we are actively looking to replace it with an advanced exploration or development stage project where we can add value and bring it to production. That's what we do, and if you reflect on what we accomplished at Terronera, paying $2.75 million for 80 million ounces, and some of the highest quality ounces in the entire silver sector, that was a heck of a deal.
Yeah, that's amazing. And did you mention the Capex at the beginning, what you feel it's going to be, and how are you going to, and obviously you have money in the bank, but how that's going to be funded going forward?
So last year's economic study estimated $100 million of initial capex for Terranera. But because of the lower metal prices, we actually pushed some capital spending into sustaining capital, such as leasing mining equipment instead of buying it. And this year, with the significantly higher prices, you do get better financial returns by simply buying stuff instead of leasing it. So that means a higher initial capital this year. Probably 120, 130 will be the feasibility number, and quite happily so, because it generates better returns. We do intend to finance the Capex with a traditional 65-35 debt equity split. The equity is covered by our cash and cash flow, so we're primarily focused on the debt side. And we're talking to a number of parties right now. We've been fielding some term sheets, and we hope to have a debt facility to bring to the board in August.
That's great. So you'll be completely prepared to move forward. So that's great. So obviously Terranera is going to be the big property, the big mine. Can you talk about, just kind of the infrastructure there, the resources around you, in the state of Jalisco, in terms of, labor force, in terms of, everything you need to successfully set that mine up and get it to production?
Yeah, so Terranera is about an hour-and-a-half drive on pavement from the resort city of Puerto Vallarta. It's a pretty nice location. Lots of people in the company asking when we can have a management meeting there. But it's up in the mountains, so it's out of sight, out of mind. There's two local communities. One is a tourist town, San Sebastián del Oeste, and one is a farming and ranching town, Santiago dos Pinos. We've actually had 30 people, members of the Ejido at Santiago, come to us and ask if they can become employees. So we took them over to Bolañitos for 3 months of mine skills training, and they're just waiting for job offers when we get up and running. We will have to bring outside workers in, but I hope over time that over half of our workforce will be local, simply through taking the young and unemployed and training them to become miners, giving them career skills. So that's the general setting. What else can I say? Because we have a tourist town not far away from us, we've spent a lot of time on community relations in both towns. And as a result, we've had for several years full support of the local communities, both municipalities and the ejidos. And we have long-term land access agreements for all the land that we need as a result.
Yeah, great. Yeah, it looks like everything is lining up for Terranera to be quite successful. I mean, do you see anything right now that would change your thought in terms of what Terranera could be? I mean, it looks like all the stars are aligning here.
Yeah, geologically, it's just a big version of Guanaceví or Bolañitos. And so we understand the nature of this mineralized system, the nature of the ore bodies, how to develop them, how to recover the metal. And of course, through the development of our other mines, we understand all of the ESG requirements to make our business a benefit to the local stakeholders.
Yeah.
And I don't see any exogenous risks. People ask me all the time about security in Mexico, and absolutely, it's headline news quite often. But to be honest, the security hotspots are few and far between in Mexico. It's basically the hideouts for the gangs in the mountains. And to be honest, the highways, the transportation corridors leading to the US border. And we're just not on any of those hotspots. So we've generally had no impacts from security issues. We do have full security at each of our operations, but that's more for internal stuff than external stuff.
Yeah, well, that's great, because that's a concern, I think, in that area. So it's good that you aren't really concerned about that. So we talked a little bit earlier about silver's role in the economy in terms of clean energy and things like that. In terms of silver prices, I mean, right now we're just over, I believe, 26 last time I checked per ounce, $26. In terms of historical prices, and I know I'm putting you on the spot, but where do you think silver can trade to realistically, and conservatively?
Dangerous question.
I know.
Well, we've already been to 30,
Mhm.
and we're nowhere near the top of this market. So on the last mini bubble in 2011, silver got to 49, gold got to 1910. Gold's already been to 21, silver's been to 30. Gold always moves first in a cycle, so that's why its high was higher than its last high, whereas silver's high is lower than its last high. But through the rest of this cycle, silver will beat gold. So where are we going from here? I think we'll be back at $30 this year. I can't tell you whether it's will be the summertime or the fourth quarter, but I think all of the fundamentals are lined up for higher prices for years to come. And if you want a general guideline, I usually look to the ratio on where it has been historically at the tops of the cycle. And in 2011, it got down to 31. In 1980, which was really the last time that gold and silver were treated as money and nothing but, due to the hyperinflation of the 70s, the ratio got to 16. And in fact, if you go back to the late 1800s, for 50 years, when the British pound was the global reserve currency, it was fixed to gold and silver at a ratio of 16 to 1. So can we get back to 31? Yeah, I think so. Can we get to 16? Possibly. What does that mean for a silver price? Higher than the last high.
Yeah, for sure. We can do one more question as we're coming up against the hour. I think it's really impressive, the turnaround that the company had from 2019 to 2020. Can you just touch base on what steps were taken to reposition the company for profitability in 2020 and kind of what you learned from that whole situation?
The bear market caused us to underinvest in our assets and our people, lack of training, lack of equipment, and we paid for it. We ended up losing money in 2018, 2019, and we had to do something. So having reviewed the operations, we decided to do everything. So it wasn't any one thing at all, it was everything. We replaced senior managers or supervisors who weren't getting the job done. We retrained the workforce where necessary to improve their skills, reduce dilution, and improve their mining methods. We completely replaced our mining equipment fleet. What else did we do? We opened up new ore bodies and closed old ore bodies. That was important because we overstayed our welcome in the original discoveries at both Guanaceví and Bolañitos. What I mean by that is that when you find these things, they're typically thicker, shallower, thicker, and richer at the top, and obviously much more profitable with lower costs. And by the time, years later, in the case of Guanaceví, 15 years later, you're down 700 meters. It takes a couple hours to get to the bottom of the mine. You're pumping a heck of a lot of water, and instead of shallow, thick, and rich, you're deep, narrow, and low grade, which is a formula for losing money, not making money. So it's really important that we make a new set of discoveries, get them through permitting and development so we can mine them, and then close those old mines, which we accomplished at Guanaceví in January of 2019. And last year we accomplished that at Bolañitos.
Yeah, and obviously the turnaround was pretty incredible when you look at the numbers, and I'm sure 2021 will be even better. So everything looks
looking
great.
At a good year.
Yeah, for sure. I think we're going to leave it there. Brad, thank you. We appreciate you coming on today and getting us up to speed on Endeavour Silver. Obviously an exciting time for the company in the metal space in general. And we definitely look forward to having you on again in the future. Maybe we can get an update on Terronera or, down the road when the drill results or when the pre-feasibility study is done. So I appreciate your time. Do you have any parting words about the stock that you want to mention, or about the the investment in Endeavour?
I just want to thank everybody for attending today, and a reminder that the traditional wisdom of buying the dips applies to gold and silver. They had a great run up last year. They're in a prolonged consolidation mode right now. That's going to turn for the better here sometime this year. And so this is exactly the time to be looking at your portfolio and trying to select winners. I would like to hope, like to think that Endeavour will be one of your winners. Thank you.
Yeah, I agree. And the stock is about 20% off its high, and I think it's a great buy down here, especially with everything on the horizon. In the meantime, for our viewers, if you want to get any additional information on Endeavour, you can go to the company's comprehensive website at edrsilver.com, including details on the company's current projects, as well as technical reports and press releases. I encourage everyone to visit the website. Brad does some great short informational videos about silver, its role in the economy. It's just a wealth of information. So I suggest you check it out. I also want to thank our attendees for taking the time today to get up to speed on Endeavour Silver. And I look forward to your feedback and attendance on a future podcast produced by Torrey Hills Capital. I will be sending out the feedback link shortly after the presentation, and your timely feedback is greatly appreciated. Until then, everyone, be safe, be well. Thanks, Brad, and we will talk to you soon.
You bet. Thanks all.
Take care.